Hello, everyone, and welcome to the weekly Delphian meeting. Thank you for attending. So the agenda today, we're going to go through market update. Also just going to discuss the studies kind of quickly, and then Shawn's going to go through some earnings stuff. So let's let's get started. Okay, so overall, we had you can see like the state ones dropped down again, almost even. I think we had a little bit of a increase on the green side. I think it was 34 to 40. So overall, the market's been pretty bearish, although this has gone up a little bit, kind of conflicting as far as that. When we look at the indices, SPX is still in state 2. NASDAQ dropped to state 2, I think today or yesterday. Russell somehow popped up to 1. And so we'll go through those individually. As far as market pulse from last week, that's where we were, 26, 24. So we had a pop and then kind of drop right back to where it was. We had a nice bounce in the market, and then the rolled over, and I think kind of just watching these new lows and nothing really popping up saying it's going to be a big move, and just kind of the market fluctuating, I think, trying to find where it's going. Let's look at the bullish bearish. So from last week, we had, even though the market was really down, you can see the bullish were going up overall. So, I don't think it doesn't look like it's going to cross. It's still kind of the same type of story as we had before. Finding the direction, a lot of volatility though. You can see like very drastic movements there in the SPX, but nothing really saying here that it's some kind of big move imminent or in process. So we go through the individual symbols. So SPX ran right up to the resistance here. Had a problem getting through that, and then came right back down to support. So, basically, here's our key levels. That entry level is our support, and then our stop loss here is our resistance, and seeing which way it kind of breaks out from there. Usually this thing will kind of climb down here and then turn around, but obviously hasn't been behaving properly, but the support and resistance are showing pretty good as far as the moves. It's given us pretty good guidance here. So I just kind of look between those two levels, the stop loss and the entry for your support and resistance near term. On average, about 2/3 of the time it'll go back into state 1. So that's kind of the typical base play that you can expect. And we just kind of guard against things otherwise. So, I mean, ideally it'll, get down here in the target range and then take off, but, we'll have to wait and see. As far as, our good old 50-day, so unfortunately, this has kind of turned into resistance now, as you can see at the top level here. So we had that good dip down, ran right back up, and you can see right here, 3 days pretty much trying to get above that and then failed miserably. So that's just turned into, I would call that resistance now. So, so that's kind of your top end on SPX. So that's about 4444. That's easy to remember. So that's a little below these levels too. So in that kind of range, let's just call it 44.50. That's kind of your top end resistance right now. And then obviously, first level support is this 43.57, and then down below here, the targets are going to be your next level of support, as far as bullish movements upwards. So that's the SPX. Let's take a look at NDX. So that one you can see down below here was in state one for a long time. We had a big move, a couple days here, boom, boom, and now we're into state two. So we kind of expected to do the normal movement. It doesn't always happen, but you kind of go down there and then back up. That's the typical movement. So that's what we'd expect. This is your near-term support, and then, next level support down here, and then your resistance up on top. So you can track those, on average, 9 days. So, a couple weeks as far as this one, and then the other ones already have been in there about a week. So let's look at Russell. Sorry, that's my mouse going crazy. Still range bound, and that's 7 months or so of being in the channel. So obviously, that's what we want to, I think, long term on the market. This is probably our best indicator. If it breaks that 2100 on the downside and holds below that, or on the upside, I think it was 2350. Just to make it easy. So we're pretty far from that right now, that 2100, or we're kind of right in the middle. And as you can see, these state ones have not been great, since this channel has been going. So I just expect more of the same. Basically we're just waiting. I mean, I'm waiting for this thing to get out of this channel at some point for a market overall direction. So, until then, it's just kind of continuing range bound, probably go back into state two. This right now, the entry level is, are turned into resistance since it dropped below, and then, our support's down here. So if it can hold the support, then it can make a rally. Sometimes that happens, not usually, but occasionally it'll bounce off that lower level. And then, it's got to fight through a couple levels of resistance. So, this would be a great indicator if this can stay in state one as far as bullishness. It's got 2,000 smaller stocks in there. So this is, would be a good thing overall if this can actually break higher out of this channel. But, we're just going to have to wait and see on this one. So that was a quick rundown. I'll open up to, I guess the other one, people are talking a lot about rates. So when rates go up, this thing gets hammered. This is TLT, the 20+ year treasury ETF. Like, if you know when they're going to raise rates, this would be a great thing to short. But otherwise, like that big short guy, he's short on this. But you got to get timing right. So when rates go up, this gets hammered at 20+ years. So now it's hit the target, and on average, a little more than 50-50, it goes back up. But we always kind of look for these, and I haven't been tracking this too heavily, as far as hitting targets. But I think that's like one of the next iterations we do as far as finding strategies to trade for ETFs and things like that. So we'll probably get into that eventually, hopefully in the near future. But just wanted to point that out, when the rates go up, this is just hammered real fast. So, and it doesn't move a lot typically, but sometimes, if there's any kind of rate increase, this thing will get hammered. So, it's definitely some interesting one to bring up. All right, I'll open up to questions, comments.
Yeah, this is Dave. I always have a comment here, so you may as well get used to some sort of a comment, probably. Two things. Russell, if it's not in state 2, but hit state 2 tomorrow, I'll be surprised because a couple of pretty huge down days here. So I expect it will dip into the negatives here, into the even Delphian boxes pretty quick. And I'd say the reasoning is there's still the worry. The wall of worry is not been, nobody's cleared any of the issues on the wall of worry yet.
Right.
And the one I brought up last week about the debt ceiling crisis, Janet Yellen says the 18th of October, if you're watching dates, the Treasury will run out of their extraordinary measures to keep the government alive, so to speak, and then it will be in default. And that's the 18th. So they'll probably, when you start hearing news stories about the Treasury had to put in effect one of their extraordinary measures, watch out for a high volatility and a down day when you hear those stories.
Yeah.
So if the 18th is the deadline, I don't know when they start having to initiate some of their extraordinary measures, but be careful about that. And I think you'll see most of the indices downtrending until Congress decides to get off their butts and do something about that. That's just not a good thing for all of us investors to have the debt sitting there. So at risk.
I agree with that. I mean, it's a totally self-inflicted wound. It'd be asinine for them not to raise the debt ceiling, but
yeah, I don't know. If we get a chance to vote, I'd vote all those people out of office next time if you get a chance. But that's just me. Anyway, that's my take on the near week or two. Just be careful out there. And big down days are kind of a problem for our plays that we use for earnings dates. So just be careful is all I got to say for the next couple of weeks. They'll eventually take care of this, I believe, but until that happens, we're going to have some volatility. VIX hit 25 today, so it's back in it's back up about 10 points higher than it usually is. So those are my comments for that market poll.
Yeah, and I think kind of echoing what I've been going through is like, all right, we need a couple of weeks for this. Things are in state 2, things are choppy. There's no real, direction as far as these like big indices. We had a up and then down, and then, I agree with that. Kind of wait and see, be a little careful on things overall. It's a good point though. And, I did hear, I've been bringing up inflation a lot, and I guess, what's his name? Jerome Powell, I guess in his congressional testimony, he admitted that it's not transitory at this point. So, I read an article the other day, like shipping rates for like a container from China to like LA used to be, like it was like 2 years ago, a year and a half ago, it was $2,000. Now it's 16 grand, per box. So there's your, inflation. It seems like, there's a lot of workers needed out there, and I don't know where these people went. It's kind of strange. I mean, I just drive down the street and everywhere's, looking for people. So, I guess that's affecting everywhere, as far as food supplies, truckers, everything. So not sure where all these people went, but, it seems like that is, I guess Powell was talking about, supply issues. So I'm
That's
definitely,
a good point. And Friday is will be the jobs report for September, because it's the first, right? So I think it's supposed to come out on Friday. And that'll be the first one that reports after all of the assistance programs have ended. So if we don't see a huge increase in jobs, we didn't last week, by the way. So, if we don't see the month over month taking a big, hit again, to drive employment back up, then that'll be I'd say an orange flag too.
yeah, could be interesting. When did that end?
I don't know. It ended right after last month's monthly report. So I think it was the first.
Yeah.
I think it was the first week of September, right before Labor Day.
Yeah. All right. We'll see if that, yeah, that could affect it. I'm not sure. I'm not sure how, like, the whole filing and, people may just take a month off before they start filing, and, I don't know. Who knows? But yeah, that could be, something to look for, watch for, and I'm reading about, like, these people getting, canned because they won't get the vaccine or whatever in certain states. So, healthcare workers, military, things like that. So interesting. Well, thanks, Dave. Anyone else? Comments, questions?
Dan here.
Yeah.
Yeah,
Go ahead, Dan.
hi. Going through your commentary on the market, it kind of painted a rosier picture in my mind than what I've been viewing, through different media on the current situation that we're in. And
Yeah.
you mentioned the container ships. I saw a really good article or a video, on the problem of all the container ships that are, anchored off port in California.
Yeah.
And they had a global mapping system of all the container ships that are out there, and it just blew my mind how many there were. And it did talk about what you said, the cost of the container ship itself to ship items. Most of it's coming from Asia.
Mm-hmm.
And one of the things that they mentioned was a couple of things that raised my eyebrows. Is one of the biggest problems with and the reason those container ships are anchored offshore is that we do not have the infrastructure right now to move all the cargo from the docking station on land inland. And there's just a couple reasons for that. There's not enough real estate at the ports of call in California to unload all those ships. It gave aerial photographs and showed all those docking stations were absolutely jam-packed. They got one small railway that goes out a little bit toward the highways. After that, it's all residential neighborhoods. And, Biden came out with this mandate that they wanted the dock workers to work 24 hours a day. And it doesn't make any difference. They could even double the dock workers, but they have no place to put the containers.
Yeah.
And the other big thing is then he put a mandate out there that the truck drivers would be fined if they don't make their space on time. So, and there's a shortage of truck drivers. So a lot of truck drivers saying, well, screw that, I'm not going to go there,
Yeah.
So there's a logistic problem as far as getting the stuff that's on the container ships distributed through the United States. That's a huge problem that won't rectify itself anytime soon because no one ever planned for this huge demand, which started with, actually it started before the COVID, but it was just exacerbated by the COVID. And the other thing is for every 100 container ships that come into the United States that are full, only 40% of them go back, meaning that 60% of them end up here. So there's a supply constraint on the other end, like China and Taiwan, where they don't have enough containers because they're not sending back empty containers. you know.
Yeah.
So, uh, so all that, you know, that supply constraint, the shortages of everything from, you know, chips to making cars, refrigerators, and I see
Everything.
it here. I can see it scare. I'm up in Connecticut, and I see what's going on here, where we're already getting scarcity of things like yogurt. I'm like, you know, why would there be a scarcity of yogurt? You know, stuff like that. You
Yeah.
know, and the other thing is the help. I see managers, you know, stocking shelves. They're one cashier. The rest of them are all the robotic checkouts. And one of the problems is with the labor is that small businesses are now competing with the government for manpower because the government is paying people to stay home, or at least they were with the
Right.
stimulus checks, you know, and you know, especially with the truck drivers, they're not getting paid, you know, really what they're worth today is, you know, for all the long hours and expenses that they have to go through. So a lot of them just aren't showing up for work because they're sitting home. And that's not anything new, but you're starting to see it, you know, show up is one of the reasons. But I just want to make that up. I just want to point that background out because for me, it gave me, I have such, in my brain, I got such a bearish stance. I'm like trying to figure out how to protect myself more than anything, you know? And, you know, even looking at earnings trades, if you have a, you know, big bearish, downward looking market, it kind of makes me hard to put on even some earnings trades. You know?
Mhm. Yeah. Yeah. Well, always be careful. I agree. I mean, I think, you know, I think like where are these people, you know, they've talked about, you know, them ending that stimulus for unemployment or whatever. So you would think they'd come back to work, but you know, where are all these people? You know, like
Yeah.
what happened? You know, something weird. I don't know. I can't explain it. So
Well, one of the things that one of the other things that they mentioned was the cost. You know, the basic thing for government is they're supposed to supply goods and services to the, you know, to the citizens of the country, and the cost keeps going up, especially with the stimulus and you know, all the money that it takes to run the country. And now it's like last I heard it was like 60% of the GDP, you
mhm.
know. And this other thing I was watching, it equated to where we were. It was they call it end stage capitalism, where it gets to a certain point, and we're already getting pretty close to that, if we're not already there, where people become so dependent on the government for their needs, you know, and with everything that I see with the supply chain issue, people are going to be more and more dependent, you know. So uh, they went back to, you know, what's the name, communist Russia, uh, and they showed the same thing. They actually they started as a federation, and they went to capitalism under Karl Marx. He liked capitalists because they built a lot of good stuff, schools, you know, roads and bridges and everything. And they ended up end stage capitalism, where the cost of goods and services cost so much, and the workers weren't being paid. That's when they had the proletariat revolution, you know. And if you look at that, it's like scary because that's about where we are right now, you know, and especially with all the political unrest that we got going on and divisions and
Mhm.
I don't know.
Yeah.
Anyway,
Well,
that's just one man's thought in this end.
yeah. Well, we're in a fiat system, you know, monetary system. So yeah, they can create money by pushing a button, you know. So I don't think, you know, you look at other countries where, you know, and I think the difference between, you know, '08, you know, what that money wasn't really put out in circulation. That was in, you know, given to the banks and stuff like that. Like all of this stuff, you know, it got pushed out in the public, like circulation. That's why I think the inflation's the big problem. You know, they're pushing this all this money out into circulation, which is totally different than what happened in '08, you know, where they just gave it to AIG and all those clowns, you know.
Yeah.
That basically, you know, mess up the system with their advanced instruments and all that stuff. So
And
So,
this is,
go ahead.
sorry, this is Dave. I wanted to comment on what Dan's, supply chain issues.
Yep.
If you watch Nike, I don't know if it's Nike or Nike, but that company, when it reported, said they had really strong demand, but they couldn't meet demand, and the shipping issues that Dan just brought up are they're telling me, and I know they're telling more people, that this is not going to be a like 1 month or a couple of weeks supply chain issue. And if that affects fourth quarter for all the retailers, be very watching if you have retail stocks when they report this quarter coming up, and then how they guide for fourth quarter because of the supply chain issues. I see tough roads ahead for all of the retailers that or I'd say OEMs that need supply chain issues from overseas.
Right.
From what Dan brought up. So Dan, good points on the supply chain, Dan. It's not going to go away quick.
No, I don't think this.
Josh?
Yeah.
It's Jean.
Okay.
I just have a question, since these guys seem to really be keeping up with the market stuff, Dave and Dan. What is your thoughts on the change in the capital gains thing? As a small-time retail investor, is that something that I'm going to have to worry about?
Is this something that's in that bill? I haven't seen anything,
They keep talking about increasing that or
Yeah.
something. And I'm like, well,
Yeah,
that means-
I normally don't worry about it until it's actually passed, because they're all talk most of the time, but if it gets passed, then yeah, I haven't looked into that too much.
To the numbers, Gene, I think the last I heard it was going to affect people that have like 600,000 capital gains. So if you're somewhat
Yeah.
on that number at the time, things change obviously, but I think they're really targeting the upper 1% for their capital gains.
Yeah.
Oh, okay. I was just curious because I kept hearing about that, but I didn't hear that part. Thanks, Dave.
I'll give a positive note. I don't know if anybody heard this, but Ford is getting ready to invest $11.5 billion. And they said that was the most that they've ever done in 118 years of history. And 4 more plants to build that truck, the EV truck, because they've got 150,000 orders for it already, which I
Wow.
thought was pretty interesting.
Yeah. That's
Which
not
means
that's not good for Tesla, right?
Well, no. That means they better start building more infrastructure for charging stations.
Yeah.
I don't think Tesla's going to do much for that truck. So I think Ford will win the game with the truck. But
Yeah.
for those who don't drive trucks, yeah, Tesla will keep it.
Yeah. Well, thanks, Skip. All right. Well, great discussion. Is anyone else got anything? Feel free. Like to.
Well, do you think that the reason there's not enough workers is that they were staying home because they were getting paid to, but now they're not? And so would it be because there's a whole lot that aren't taking the vaccine, or they're going to lose their jobs? That could cut back on the availability of workers, I would think.
Yeah, I think that's targeted though right now, as far as
Yeah.
like the hospitals and I think.
And I had heard there's a lot of women who are not going back in the workforce because of COVID and the worries about their kids in school and things like that. So there's a lot of women who are not going back in the workforce right now. So there's a lot of gaps there where women typically had the lower paying jobs. So, and they're not coming back for now.
Hey, Josh, this is Winslow. I think many people in the baby boomers are starting to retire.
Oh yeah, that's
COVID was a good reason. So I think it's something like 1 million to 1.5 million per year. So that
makes sense.
Yeah.
Yeah, pull the trigger at this point. You're like 70 and you're like, all right, I'm done.
Right.
I'm not putting up with this. Yeah, because that's a good point. lots of different aspects to think about. But yeah, I would still think, since they pulled that extra money or whatever, per month, I would think you'd get a lot of people back in the workforce. Whoever those people were that were sitting home, I think they'd be out there looking for jobs at this point.
Yeah, they were low-wage employees, though, the $300 per week. Yeah.
Yeah. Well, that 300's gone now, so.
Yeah, this is Dave. I was to the groups that have the largest unemployment yet, or the groups that haven't come back, are the lowest paying. We're the lowest paying jobs before the pandemic even hit. So hospitality, restaurant workers, those people are just not coming back because they're saying, well, I'm not coming back just because of the pay is still too low. And, I can find other jobs somewhere else. And so those kind of industries are the ones that are really suffering. And they're ones that we tend to find, take advantage of the most, going out to eat there, it's like, where is the staff? Well, they're just, they weren't being paid enough before the pandemic. And now they're saying, well, that's the reason. So you better raise pay a little higher or a lot higher.
There's a new middle class being hit now because
The retiree issue is also hitting at the same time, as Winslow pointed out too.
Someone else I heard.
yeah, that was right.
Hey, Ryan.
There's a middle class market being hit because companies in New York for people with master's degrees are being laid off because they won't take the vaccine.
Yeah.
Heard a couple companies have laid off a couple thousand people already nationwide.
Wow. Yeah.
It's just 2 companies. So there's a lot more, I'm sure.
Yeah, I'm sure. I know they came out with that, over 100 employees, whatever. Yeah, we discussed that kind of last week. The people that were resistant to the vaccine were the poorly educated and the PhDs. Go figure. So
I disagree with that, Josh,
why?
because I think I know a lot of people that aren't poor or don't have PhDs that are anti-vaxxers,
Yeah, I disagree with that too.
Yeah.
It's interesting. They have shown that overall 71% of the population has gotten at least one shot. And I'm not getting political here, but they showed in the red states, the number drops down to about 50%. So
Yeah,
I think it's politics right now. So, it's the thought we don't need to take a vaccine and they're following some bad advice. So.
Yeah, we definitely don't need to go into politics. So, yeah, no, I was just parroting, some study I heard, for those numbers, as far as what they tracks, as far as people that, and level of education, some graph that I've read about. So, okay. Any other comments, questions, spirited discussion?
Hey, Josh, it's Joe. I got a couple downside numbers.
Yeah.
I think I mentioned before, I'm a fan of the Fibonacci. I think it just speaks to the ebb and flow of the markets. Obviously the market up until recently has been on a tear for a long time. So you could pick some intermediate lows, be it the March 12th low, the March 5th low. But if you go back to what I think is the last kind of major low, that would be the pre-election. So you basically go back to last October, you had obviously a pretty big run up. If we were to get, a 3/8 retracement in that run up, and I'm talking Dow, S&P, and NASDAQ, we still need between 6 and 7% pullback.
Okay.
So if you're looking at the Dow, you're looking around 32,100. You still need a couple thousand points. If you're talking the SPX, you're talking just over 4,000. So, almost a little over 300 points. And the NASDAQ, we'd have to go down to almost 13.6. So about another 900 points down. So not saying that's going to happen, but like I say, I'm a fan personally of the Fibonacci stuff, and there are some levels if if the poop really hits the fan here.
Yeah. Yeah. Well, I mean, the other good news is we're almost out of September, which is typically the worst month of the year for stocks. So, hopefully it's not a red October coming, but we'll have to wait and see. So.
Right, our 10-day terms, and I think it was what SPX and one of the other indexes. We talked about 2 days or 2 weeks in state two.
Yeah.
We're up around 7 days. So yeah, hopefully just a few more days for those bulls out there. But just wanted all for those downside numbers.
Yeah, definitely. Be a little careful in this market until we get some, definite, some strong signals. But no, thanks, Joe. All right. One thing I did want to bring up real quick. We modified over the weekend the the study, so now we're only putting out bull calls, bull puts, and the bull put is the new strategy here. So I'll pull one up real quick. So basically, you got your close here, 168. So we're selling the first strike below and then buy in the next strike above the standard deviation. So this is the setup here. Here's your risk reward, a lot different than the ones that we had, where we're basically, selling this one and buying two below. So it's a lot different, tested better, and just wanted to make you guys aware of that. So going forward, that's what's going to be populated here. So any questions on that? If you want to still do long call, I mean, you can still test things yourself here if you want to change them, but we just want to kind of point people to where we think is, the more successful strategies here, long-term bull calls and bull puts, so the spreads. Any questions? All right. Mr. Shawn, I took all your time, so go ahead.
No, that's good.
It's up to you, man.
That's perfectly fine with me. That's good deal. Good deal. Yeah. So what I wanted to do is, like Josh had mentioned, just show everybody, some of the trades, that we're still making sure that we're looking at, the pre-alerts as they come out for the earnings trade. So if you go into your earnings and then pre-alerts, you have your pre-alerts that should populate. Some of these you're not going to have because these aren't relative to Q3, but these are just ones that I have in my system from previous earnings that I had selected. So let's see, I'm not sharing. Hold on. I always think that I'm sharing and it's not. So when you go into earnings and the pre-alerts, you can see some of these populated. Some of them are, estimated. The majority of them are estimated, and we do have UNP, which is confirmed as a bullish pre-runner. But some of these, what I was saying is some of these like NSC and SAVE, those are ones that I had previously in the system, probably for some testing or something that we had done some previous quarters. So that you're not going to have those, I don't believe, but you should have the other ones. So, I just want to make sure everybody's still checking that. We do have within the earnings the shared file. Josh sent out that link a while ago for the shared drive, so I want to make sure everybody's using that as well. I'll click on it. This is just my shared drive, so I was able to actually add some of the files in here today. But we can always, if something looks amiss with the pre-alerts or if something doesn't look right and you're not sure what's happening, you can always come into the shared drive and pull up this earnings plan file that Josh had saved in here. So, at the time, when Josh created this file and saved it, again, it is going to be static, but we can see Costco's still on here as a non-mover from, last week. So you can still see some trades. Now, obviously, if any trade on here has become confirmed, let's say this, PGR had come confirmed, you're not going to see it here, but you would see it in the system. So just be aware of that. As always, we've talked about this page being static, but you can always come here and look to get an estimated to see, when those trades are going to be coming about, the date and the symbol. I did add the Q2 virtual portfolio results in here as well. So you can come in here to this shared file and pull them up. I have them labeled as such as here as Q2 earnings, vol, let's see, vol, rise, long, strangle, and I have all the other ones here as well. So if you want to come in and check those trades out, you can check them out. I'll pull one up so we can see what it looks like. This is the bullish pre-runner long call. And as always, you can pull it up. You can actually load it, upload it to your computer, your laptop, and then you can kind of run some different analysis on there as well if you want to do so. But anyways, you can see these are all the closed trades, so you can see all the different symbols, the current stock price of when I actually exported this data, the entry stock price for the trade, and it gives you the trade details here. So it gives you the the entry date, the close date, strike price, expiration of the option, the quantity that I did, and so on and so forth. So you guys can get in there and explore this data yourself if you want to do so. What I was going to say is just remember that I'm trying to use a position cost of at least $1,000. So these all should be above $1,000, and that's why we're having, some of these are more quantities than the other, a 2-lot here versus the 10-lot here. So, you can get in there, check it out. Any questions that you guys have for those, obviously feel free to reach out to me, and we'll see if we can get it situated for you. But all those are in there, ready for you guys to check out. I did have 4 trades that were still open from the previous quarter whenever we kind of went over that analysis. So I added those into my final sheet as well. I'm going to be posting this, I believe, probably today or tomorrow, but I got to just format it a little bit so it looks a little bit better. But we can look at column J and column M. Let me get this a little bit smaller. Column J here is the original. Column M is the new. So basically, or I'm sorry, excuse me. Column M was when I had the trades pending. Let's just note down there. And column J is actually when they were complete. So we can see we still had 4 trades open here. And then, let's see, I was trying to scroll over. And now we have 0. So we can see that all 4 of those trades that were pending actually closed out to be on the losing side. So we can see we dropped from a 61% win rate to 51%, and we can see our totals dropped as well. So I'm going to share that, and you guys can look at that. I mean, that was a decent drop in my opinion, obviously from a profit factor standpoint and from a profit total standpoint and from a win percentage. So, hopefully, with the trade setups that we've done for this new quarter, using the bull put and using the different trade type, I think that's going to improve these results. It's yet to be seen, and obviously we got other factors coming into the market. Like Ray just talked about the labor shortage and supply chain issues, and government and debt ceiling and things like that. So obviously, like Josh had mentioned, be careful. Just make sure you're in the trade that you want to be in, and make sure you're taking the amount of risk on that you're comfortable taking as well. So I should have these posted up in there too. I just haven't put this in there yet, but. Any questions on those virtual portfolio files or this tally, this final total? Everybody's quiet. And that brings up a point too that I wanted to mention when a couple of people said they were a little concerned and more bearish on this market. The market did have a great bullish run over the past couple of years, right? So people, not us possibly, but maybe, got a little more invested than they typically would have, because obviously they see the market going higher. So they're a little more invested or over invested, if you will. So now's a good time to maybe reevaluate how much you have invested and, reevaluate your allocation and your portfolio just to make sure you're not overextended in one area or the other. So, you're being prepared for if the market does come down, maybe like Joe said, the Dow on 32,000, the SPX 4,000, that you're kind of prepared. Maybe use some hedging techniques to see if you can, use some hedges, either those ETFs to maybe hedge some bigger positions in your portfolio. But be a little creative, but you can get in and use Delphian and test that out. Other than that, that's all that I really had. Nobody has any questions. I hope everybody gets in there, checks these out, check out these, check out these files. These are basically what I did was right from my, I'll pull it up here, right from my organizer in my virtual portfolios. What I did was I just took one like this non-mover and I went to my closed positions. And then I used the export button, and then all I did was just export that data straight to Excel, and then I just loaded it in there for you guys. On some of these, the state wasn't showing up on mine, so I just deleted that column. But if everybody's kind of confused on that, I can help you out with that. But some of these didn't show up because of their images and they weren't exporting properly, so I went ahead and just deleted that column or removed it. But we can see all this data here, and I just did the export. So, any questions on that?
Hey, Shawn, the ones that are still open are, I mean, you have automatic close on certain percentages of gain, right? So the ones that are still open are I'm guessing are just waiting to hit the target kind of things, right?
Well, the ones for the Q2 trades they're all closed, so they're all done. So there's no more open on that. Column J here is the complete, so I don't have any trades open here. Let me just let me do this real quick.
Okay, sorry, I was thinking it was
No problem.
talking about the current quarter so far. So yeah.
Oh no, sorry. Just this is the past quarter, the last quarter. I was able to go in there and download all that virtual portfolio data so I can look at those individual trades. So yeah, the Q2 stuff is complete. Before, when I showed this information a couple weeks back, I still had these 4 trades pending. But now the 4 trades are closed. So this is the new data here, how the results ended up, and it actually ended up a little bit worse just because we took a loss on all 4 of those trades. But yeah, this is for Q2, so sorry. But yeah, on these trades, on these last 4 trades, I did have either a profit target set up, so either the profit target based on the strategy design that we used, or if the options had come to the time frame of when we had to get out of the trade, either if it was like a non-mover, maybe option expiration, or if it was a bullish, pre-runner, then the day before the earnings announcement, or if it was a runner, then 20 days after the earnings announcement that I had to get out at that 20-day mark. So yeah, any other questions, guys?
Hey, Shawn, on the ones that we lost on, have you did any further analysis as far as looking at it? Any reasons why all those lost based on prior history, or maybe any other technical indicators that might have been better or to look at, like the RSI or something else, or the MACD, to see that it was way out there in extreme, and that wouldn't have been a good stock to purchase.
Yeah, I haven't been able to do so yet, but I think, like we've talked about before, I think it's a great idea to get in there and see. And I think the strategy design, the strategy setup on some of these is going to help, changing over to that bull put strategy. I don't think that's going to be the end all, be all, right? I think there's still more improvements we could possibly do. Like you say, maybe look at some other indicators in the market, even analyze the state or maybe the grade, or like Sudhir had mentioned before, the seasonality of that quarter versus the same quarters relative years back. It's just, I haven't had the time to do that yet, but we all have access to be able to try to get in there and do that. That's why I wanted to be able to go in there and share these files, so then you can go in there and look at it and just see if there's something maybe that you could pick out of there. I don't know which one this is, but earnings is the bullish runners. Pick something out there that says, hey, why am I losing on this CVX trade, or why am I losing on this AXP trade, American Express, and see if there is something that could be done versus taking a loss on this trade. This one did pretty well. We can see obviously there was 9 trades and 2 were losers, but like you said, is there a way to improve these, or maybe holding them too long? Maybe we just held on to these trades too long. Maybe that 20-day or whatever it is a little bit too long in this instance. But like Sudhir mentioned, maybe that's not the same for Q4, Q1. Maybe that's just relative to Q2 based on just different things maybe that American Express has going on at that time. I'm not sure, but that would be some great analysis that I'd love to hear if anybody wants to jump on some of that.
Shawn,
The other question I have is there any way to create a directory of all these different files? Because when you look in that list, the tail part of it is cut off and you really don't know what, you kind of have to go to each one, I guess.
Yeah. Yeah, if you hover over it, I think it'll pull the name up like it does here. I was wanting to put it at what I asked Josh today too, and we're trying to figure out is if we can do a folder. So maybe if I can create a couple different folders within this link here, you know, maybe I could do one for long calls or do one, you know, I don't know how we would sort it out, but maybe there's a way we could make different folders to save those in there so then it would be easier to read. I could obviously change the name as well and just shorten it. This is just copied the file over from my laptop, so it just saved that name. But maybe I could use some type of abbreviations or something that might be better suited so you could see the whole thing. So
Right.
sorry I did it that way, but I just did that today and I didn't know how I was going to port it over, but yeah, I could maybe change that if that would be more beneficial.
yeah, this is Dave. I'll follow on to that last thought. It might be nice to have, let's say, one place that we can go and look at all of the strategy, I'm gonna say descriptions, if you will.
Mhm.
You know, how many days, this or that, what strikes, that sort of thing, like all in once for each of the strategies, so that we can do what you were just asking and say, okay, I want to see what the last tweaks are. What was the last tweak to the strategy? Because I might be behind a month or so and, you know, keeping up with my strategy details. And then maybe we'd have a better, let's say, view of you know, what we might be doing to try and, you know, tweak further, or, you know, look at a slight change to the strategy for the alternative going forward, and be able to actually report back interesting stuff. I mean, I try a number of things, but I'm not that good at you know, staying consistent with everything. I'm kind of like constantly tweaking, and maybe that's not a good idea. So just saying.
Yeah, no, that's understandable. And it is, I think, even I don't know, I can't speak for Josh, but for myself, you know, when I get in there and I start making tweaks or I start trying to optimize a trade, if I don't keep track of it on another sheet, then I kind of lose where I was. I know where I'm at because obviously that's the results I'm getting then, but I kind of forget, you know, what tweak did I made or what tweak did I make, you know. Delphian's good about keeping the history like that. But yeah, I mean, I see what you're saying, Dave. If you could maybe shoot me an email afterwards just to kind of briefly describe what you're talking about, because I have a lot of the data already. I mean, you don't want to look at all the files that I have because some of them are just numbers, and even like some of the files Josh has, it's just, you know, an Excel sheet full of numbers. But, you know, I keep everything from that formula that you guys have helped me work on that tells me the days, you know, entry date to exit date and how many days are in between, or, you know, how far back in time do I need to go based on 20 days previous to the earnings announcement. So I have all those files because I even have to run a formula that tells me, you know, how many days am I in the trade, and so I can get you guys an average number of days per trade. So things like that I just run manually with the formula. So if you can be a little specific on an email and tell me, you know, what type of, you know, flow or what type of setup you're looking for, I could see if I could put something together for you. Because yeah, we have, you know, when Josh does a non-mover list, he has all the criteria here in this sheet here. And then obviously, you know, the strategies, we haven't made too much optimization to the strategies that he has there. But then obviously once the trades come about, if they're confirmed or not confirmed, and then running other formulas and things like that, you know, I could try to help you do that. So.
Yeah, I'll shoot you something later tonight, probably. I'm my own worst enemy when it comes to this, and I blame my engineering background from continuous process improvement. That's that problem, you know, makes that problem even worse. So.
Well, I mean, I like it. You know, I like us talking and us trying to figure out ways to improve these strategies because, you know, I don't feel like the strategies are perfect by any means, you know, and I think we can improve them. So, you know, using all of our brains together and coming up with some good ideas, I think can only make what we're doing stronger, right? So, yeah, it's good. Yeah, sometimes the emails, you know, if it throws me off, I don't have a problem sending it back to you and just asking you to clarify a little bit. So that's not a problem for me at all. So I'd appreciate you doing that. Thank you. But yeah, that's,
Well, as
you know,
far as
that's
the
why these,
strategies go, Shawn, just we're 3-0 so far this earnings plan.
yeah, so you did the JP Morgan, right? I think you did the JP Morgan, was that the one? And then,
Let's see. Bank of America,
that was it, yeah.
Costco, Citibank, and JP Morgan.
Okay, yeah, so,
Four and
okay,
oh,
cool.
4-0.
4-0, yeah, good. So yeah, so the
So we
Costco
are
trades, I'm glad,
undefeated so far in the earnings plan. Of course, it's only 4 trades, and you know the other trades have been all estimated earnings, so I passed on them. But
Right.
so far, we have not had a loser.
right.
I doubt
Yeah,
that'll hold up, but you know, so far so good.
So far, so good. That's right. Yeah, the Costco one, I'm glad you brought that one up because it's an interesting one that, you know, I had an issue with the IT group and that wasn't on that pre-alert, but it was on, you know, this file that Josh had here, and it was within the earnings plan. So, you know, that's a good thing that you brought it up because, you know, I think if you kind of have these on your radar, you know, they're coming about, but with that pre-alert not populating that one day, that kind of perturbed me a little bit, but it is here on that plan file. So, and that was an interesting trade where it did spike up pretty big and then the market sold off and it come back down, and there's a lot of big movements within Costco, and it's pretty much right at, I think, the entry price today. So it's been a pretty crazy ride, but you know, and then the other stocks too. I mean, the bank stocks the earnings come out almost at the right time, right? For when we had the Fed meeting last week and just all the different talk that we had last week, and you had that down day, then you had that big up move in the market, and the bank stocks, I think they were up 3 or 4 days in a row. So that really was able to trigger the exits on those bull put spreads, which again, really surprised that we were able to get exits on those bull put spreads that quickly, but it happened. So I'm glad you traded them, Satir, and I'm glad you made some money on them. And yeah, I don't assume the 100% win rate is going to continue, but it would be nice if it did. So.
Yeah, and I think it'll be interesting to see, you know, the conclusion we came to is that spreads end up giving you a better profit factor because they, you know, the losses are less than going with a long call or a long put. So now that all the bullish runners and pre-runners and stuff are spreads, I'm very interested to see how that data comes out. You know, over a full earnings plan.
Over a full cycle, yeah, I agree.
Yeah. So, but so far so good. You know, a lot of trades that you know today I think 4 out of 5 that were on the pre-alert or were the earnings were estimated. You know, so they weren't confirmed. Right. They had to pass on them. But right. I entered one trade. But you know, it's just nothing that can be done about that. That's just nature of the earnings.
Right. And I think it's really, and you have a certain amount, I know that you invest every time in a position. And I think that's one thing that's a little bit hard for some people, right? Is you don't know how many trades are going to come out as confirmed versus estimated. So if you're looking to allocate a certain percentage of your portfolio to the earnings plan, it's going to be hard to do that because it could vary. You could have, you know, 40 trades, you could have 100 trades, you know, estimated, and you can have 40 that are, you know, confirmed. So it could skew that quite dramatically. So, you know, I think that's going to be something we have to work for as well. But again, we've talked about that. Those estimated ones are just, I think that's just the nature of what it is. You know, that's what it's going to be. So
yeah.
Good. Well, thank you. All right. Well, that's all I had. Again, I mean, just go in there, check out that shared file, guys. Look at those different you know, the different trades that we have in there within the virtual portfolio. You know, do some of your own analysis. Let me know what you're seeing or what you're thinking. And if there's any questions I can answer based on those files, I'll definitely do so. And then go from there. So I appreciate you guys taking the time.
Thanks.
Yeah, thanks, Shawn, and thanks for sharing, Sadir, the results there. So keep us updated if you feel free. If you want to, you know, we appreciate hearing live portfolios, how they're doing, and hopefully our win rate keeps on going. So thank you all.
Thank you, Josh.
Thanks, Josh. Thanks, Shawn.
Thank you, guys.
Hi,
Thank
guys.
you.
Thank you.
Yeah, thanks, guys.
Thank you.
Bye, everybody.